decade, the gold loans market has exploded exponentially. There are opportunities in it, there are challenges, but of course, it now forms an integral part of the gold value chain, the entire ecosystem. So our next session is going to be very, very pertinent as we talk about loans against gold, opportunities and issues. Chairing this session for us will be Mr. P.R. Somasundaram, a gold industry alumnus. Joining us online for this session will be a pioneer in corporatizing the gold loan business. Mr. George Alexander Muthoot is the managing director of Muthoot Finance. Also inviting on the stage live for this session, Mr. Devendra Kumar Ojha is the commercial banking. Mr. Devendra Kumar Ojha heads the commercial banking for Federal Bank. Mr. Pradeep Nagori is the founder of KVIX, and Mr. Pramod Mohan is from FinMet India Private Limited. Going a little bit more detailed into our presenters and the session's chair, Mr. P.R. Somasundaram is a veteran in the gold industry with over 27 years of experience, and this experience has spanned across diverse sectors including FMCG and banking. An alumnus of gold industry, he has made significant contributions to the field through his illustrious career. Prior to his role at the World Gold Council, he served as the Chief Executive Officer of Lakshmi Vilas Bank, where his leadership and strategic insights were pivotal in the bank's success. Mr. George Alexander Muthoot is already online with us. He's the Managing Director of Muthoot Finance, and he's a distinguished figure, ladies and gentlemen. It's a name almost everyone knows in India now. He has been an integral part of the company since its inception. A chartered accountant by qualification recognized for his excellence in financial services, he received the Times of India Group Business Excellence Award in March 2009. He has also served as a chairman and is currently the vice chairman of Kerala Non-Banking Finance Companies Welfare Association, also a member secretary of the Finance Companies Association in Chennai, a founder and core committee member of the Indus Entrepreneurs International Kochi chapter, and a CII National Committee member for Entrepreneurship and NBFC. Our next speaker on the stage is Mr. Devendra Kumar Ojha from Commercial Banking, Federal Bank. Mr. Ojha is a seasoned banker with over a decade of experience at Federal Bank Limited in commercial banking, and he specializes in product design, formulation, execution and delivery for MSMEs and mid-corporate clients. Mr. Ojha excels in supply chain finance, trade receivable discounting system, and bullion gold metal loans. Our next speaker on the stage is Mr. Pradeep Nagori. Mr. Nagori is the founder of KVIX. As a chartered accountant with over 20 years of leadership experience in finance and business, he is now spearheading a groundbreaking fintech venture designed to offer unique opportunities to a new segment of business partners. Our final speaker on the panel this afternoon is Mr. Pramod Mohan from Fintech India Private Limited. Mr. Mohan is the co-founder and director of FinMet Group of Companies with over 25 years of international experience in commodities and financial markets across India, Australia, Far East, Middle East, and North America. He is a leading innovator in the precious metals industry, dedicated to integrating technology into the metals sector, offering advanced solutions for gold loans, e-gold, and metals trading. Additionally, he mentors and invests in fintech startups and plays a key role in regulatory discussions as a member of the Independent Governing Council of the UAE Ministry of Economy for UAE Good Delivery Accreditation. A big welcome to all the speakers on the stage as I leave this session in the hands of Mr. P.R. Somasundaram.
So thank you all very much for the time. Lunch is a very, very strong line to stop, but we need some really insightful comments from all of you, from the bankers. So first I will go to Mr. George Alexander. Sir, can you hear me?
Yes, I can hear you.
Thank you very much for coming. I mean, as a pioneer in this industry, how can I start the session without getting your comments? Now, more specifically, sir, I want you to tell the audience, how do you see this market in the current state? Everybody knows it's growing, etc. But you are the business insider. So tell the audience, what is it that you are witnessing in the gold loan market?
Gold loan was actually, you should say, it has been pioneered by Muthoot because it has been made corporatized by Muthoot Group actually. It was actually gold loans were actually a unorganized sector. There were no organized players. We actually came in about 50 years back, started this in an organized manner, and now branches, etc. Everybody is doing it. So the idle gold which is lying in the people, we have been able to monetize it and monetize it to the benefit of the people. So when people are able to get money on their ornaments quickly and easily, people still prefer to keep ornaments with them, definitely for using it and also for in the need of in an emergency, they can get money on it. And that is what Muthoot has been able to do. And today, the market is quite large. I think more than 2,000 to 3,000 tons of gold are lying with the banks, NBFCs, etc., which has been monetized and people are using. Now, to see you asked your question about the prospects for this. As in and as a growing economy, people need purchasing power. In India, there is such a huge population, and quite a few of them do not have the purchasing power. So they have to either take loans, maybe they can take loans on a car, they can take loans on home finance, they can take loans on many other things. But for a quick domestic need or a quick urgent need, nothing better than a gold loan. Even if they want a personal loan in India, you need to have the credit score, etc. But for gold loans, there is no need of a credit score. You only need to have good quality gold with you. You come to the branch, we are able to dispose the customer in 5 to 10 minutes. Probably some others take a little more time. But finally, they get the money and they can use it. So, in a growing economy like India, where many people do not have a credit score, etc., they are unable to get other type of loans. So, this is the simplest and the easiest and the most quickest loan which people can get. And today, with lot of purchasing power, need of the hour for the people, gold loan plays a big part. And I'm sure this is only go places. This is the organized sector of gold loan has actually increased twofold, threefold, fourfold in the past years. And the last 4 5 years, it is going big, a big growth, probably because now banks are also very much interested in this. So of course, as a loan product, this is very safe. So the prospects for this gold loan business is quite huge. The only concern here is that it is operationally a challenging business because the gold ornaments have to be taken. It has to be assayed without destroying it. That's a challenge which is not easy to master, and those companies which have been able to master that have been able to do it well. So finally, for your question, the prospects for gold loan business is huge, and I'm sure World Gold Council will also be happy that people who purchase gold, make ornaments out of it, have a use for it as a pledging and taking a loan.
Thank you very much. That was a good summary of the current market. Now I'm coming to Devendra from the bank. Devendra, when did you really see this market actually growing very fast? Since when? I mean, gold loans, as Mr. Alexander said, has been there for thousands of years. When did we see this move towards banks becoming a big player in that, along with NBFCs?
Yeah, thank you. So if we, from a banking perspective, if we see the industry, I'll just go to the COVID era. I see a significant traction to the gold loan industry during the time of COVID, when all the credit supply has been at the lowest of all time, and banks are reluctant to offer to MSMEs or to the retail customers. In that, gold came as an though it's already a shining metal, but it's again, it has shown his like the uniqueness, and as Muthoot sir already told, the product itself has a characteristics which allows seamless delivery of credit to all strata of society, be it retail individual customers, MSMEs, or farmers. So I can see a significant potential, or you can say the increase in the upliftment, the pace at which gold loan has increased after COVID. The same I can see in like the banking portfolio also. Our book, if we talk about a specific federal bank, we have significantly grown. Some credit goes to a regulator also, while they have given some leeway to banks to increase the LTV from 75 to 90%, and that has given a ultimate boost to grow this business during COVID, and then now it is going at a very rapid pace, and this is going to be, as I resonate the thoughts of sir also, and it is going to be non-breakable for at least a decade.
Right. That's a very good thing. You mentioned about COVID, and you mentioned about RBI facilitating it with 90% and all that stuff. In recent times, we have also seen there is a big, one of the biggest things, as I see it from the banking side as well, is this co-lending. That also has actually opened it up. Now, where this was a big opportunity probably, it's the same gold loan, but now it is shared between an NBFC and a bank. The question is, why was this sudden thing? Is it because the gold loan branches or things were not expanding? What was in gold lending that it absolutely changed the space of growth?
Yeah, so so if you see the statistics also, the growth of gold loans primarily happens in rural and semi-urban. I think both these both these region accommodate. I think almost 80% of the gold loan happens. Now, for banks specifically, they don't have that kind of reach in rural areas where this product demands special special attention. There comes the co-lending part, where banks and financial institutions and NBFC or fintech players, they can come together. Fintechs will share their expertise in offering the services to the end clients in rural area also, while banks will be sharing their capital part. And by virtue of this only, while we have to understand one thing, that gold loan involves a heavy infrastructure requirement, because the gold which are collected, jewelry which is against which the money is being lent, that has to be stored in a very safety, and all this privacy has to be maintained. And for that, there is a huge infrastructure investment. All the players has to do that. There, in the co-lending, that is being shared with fintech and NBFC and banks. And then by the outreach of the NBFC or the fintech, banks are leveraging that, and they are reaching to the end users who are otherwise, if bank has to solely go into the market, they will miss that part.
Thanks. Mr. Alexander, I will come to you after all this, because this co-lending, I would like you to have a few words. Now, I'll come to Pramod. Pramod, you're in the digital side of things. And that is again a new trend that is developing. How do you see this market? Or is it just, at the moment, obviously there is more, there's an opportunity, but there's more noise than the real growth. How do you see this?
So we are we are pretty new in this particular field. And as FinMet suggests, what we're trying to do is to combine finance and technology, right? As ex-bankers, conservative ex-bankers, we looked at this, and when we decided to get into this sector, we were very clear that we wanted to understand the whole market first. And for that, what we did was we did it on our own. We didn't hire anyone from the market. We just wanted to do the journey on our own so that we understand each and every aspect of this business, and based on which we can create our own SOPs, which is in, and I forgot the key part, we wanted to be partner for the banks. So clearly keeping in mind that what the banks require from a compliance, risk, regulatory perspective, we created the SOP in line with those requirements. And once that was done, we did the outreach to the banks, explained to them where you will have a management dashboard in terms of what's happening on ground, where is the goals coming in from, what are the leads, what have we lost. So it was a great thing for them because they never had anything to understand actually what's happening on a particular region or a branch level at all. So they had data, but it was jumbled and it was not in a form in which they could use productively. So using technology, we were able to create those things. And the products that we were offering were doorstep as well as the balance transfer. So when it comes to balance transfer, we were very clear that we wanted to ensure that security is a prime thing, right? When you're moving collateral from an existing lender to our partner bank, it was just done by the officers on ground without any insurance, without any proper setup. So we tied up with the security companies to move the collateral. So definitely, the opportunity is great. RBI, the regulator, has been pretty good, as you rightly said, in terms of putting the checks and balances. But the way in which it has been implemented needs to be tweaked.
Right.
If technology really needs to be used to the best advantage, ensuring that banks can do what they're good at, which is lending, and you should leave the other part, which is the infrastructure and the support services to the experts.
Right. I will come back to each one of you specifically. Give me at least one idea which you think should be done. So now let me go to Pradeep. Pradeep, you again, KVIX, you have experience in this field. How do you see this market developing in the next few years, given the context where we are?
Yeah. Good morning, everybody. Thank you for inviting me on the panel. So, we've all spoken about the gold loan markets. Let's just take one step behind and see the size of the market first. And we'll be surprised with numbers. Because a lot of times when we are in the business and in our day-to-day affairs, we sometimes misplace what the size of the markets are. So, anybody in the audience, if want to take a guess of what is the size of gold loan market, can someone just take a wild guess? $14 lakh is the total market? So, roughly there, the total gold loan market in the country today is about 20 lakh crores. And you know what is the size of the housing loan market? It's 20 to 23 lakh crores. So the gold loan market and the housing loan market in the country are almost similar. That is the size of the opportunity that we are talking about first. Now within 20 lakh crores, the organized bit, which is kind of taken by the banks like Federal Bank, SBI, etc., and the NBFCs, is roughly about 7 lakh crores only. So the 14 lakh crore market is still there somewhere in the unorganized space, which is largely taken by your jewelers, pawnbrokers, private money lenders, and all of that. So while the market is still growing, overall market is still growing at about 15% CAGR, which means 20 lakh crores will become about 40 lakh crores by about 2030 or next 5 years. We are talking about a huge opportunity here. And there's so much to be done in the space And there's so much for every player, whether it is organized or unorganized, or there is a space for unorganized to get converted into the organized place, that we will basically have this as a huge opportunity is what I'm trying to say. I mean, you asked me how the market will grow. The market is definitely growing, and it is asking for new solutions, new products, new players to come in the market. It's one of the easiest loans to give. It's one of the most secured loans to give. You look at the data, it's like one of the least credit cost loan in the market. You know, there's one report which says the credit cost in gold loan is about 0.005%. So that's kind of the product that we are talking about. It's highly liquid. 90 days, 60% of the loans comes back. So it's a huge opportunity. There are solutions required, and I think people like Pramod, people like us are trying to bring on those solutions for the customers in the market.
Right. Thank you. I definitely would like to understand where, clearly, I mean, it's a big market, but even 20 lakh crores, even, you know, I get a bit, because I look at the RBI report, the actual gold loan is 85,000 crores. Maybe priority sector agricultural loan is there. So it could be maybe 1.5 lakh crores or 2 lakh crores. I don't know. Plus the NBFCs come in. 20 lakh really even, you know, makes me think, is it such a big thing? But I would really like to, I mean, I do believe that people do get credit, and gold is an essential form of credit, etc. So I'm going to have a quick dash of questions to each one of you. Mr. Alexander, I want to ask first thing. You are able to give loans in 15 to 20 minutes. People walk in and walk out. I mean, an ATM takes more time, many places. I want to ask you, what kind of a check can you do, or is it something which is your data analytics about the consumer which makes you give loans in such a fast time? Maybe you're also doing it. I'll come back to you. How do you do that? I mean, I go into an ATM, it sometimes takes, honestly, more than that.
Thank you. We were talking about the market also. I think the market is very huge, definitely very huge. We ourselves have an 80,000 crore gold loan market. 80,000 crore was Muthoot's gold loan share in that market. Now, to come to how we are able to do it quickly, I think we have things unique only to Muthoot, right? All our branches, we have about 5 or 6 people in any branch, 6 to maybe bigger branches, maybe about 10 or 15 people. All of them, including the manager, are trained to check and assess the gold. They are trained to check and assess the gold even without destroying it. So every day we have about 2 lakh customers walking to our branches, either for pledging or for taking. So we have such a huge number that they have such a lot of experience. We are able to assess the things in maybe 10 minutes time. We don't need 10 minutes also. So if it is a single ornament, we can do it in 5 to 10 minutes. If it is a bunch of ornaments, maybe 3 or 4 ornaments, it may take a little more time. So we have developed the system, and we do training also to our staff. We have a 1,000 member audit staff. That is, their job is to go and check the gold loans in the packets, etc. Because this is a very process-oriented and operationally challenging business. But we have trained all our people to do it. Even the auditors know to check it. All the staff, all the 30,000 staff are good at checking. That is why we are able to do fast. To answer your question, we can do it in 10 minutes. And if it is a new customer, because it's KVIC, etc. is required, it takes another 5 minutes more.
Thank you.
Otherwise, 15 minutes, we can dispose the customer.
Right. Just so that people are aware, I mean, everybody in this audience knows about this. It's obviously one of the least credit costs. There is very little money that bank loses even if somebody does not able to pay. The second important thing is there are frauds. There is no doubt. I mean, people do pay. Again, it's one of the smallest amounts. If you compare the real amount of loans given and the amount of frauds because of old, spurious gold or something, it's very, very small. So it actually is very surprising, because if you go into a hallmarking center, they take nearly for 3 hours, 4 hours to tell you whether it is real gold. And here is gold loan companies being able to do it in 15-20 minutes. It's also different because there it is about, you give only 80% of the value of the loan, etc. So you are able to take a little bit bigger risk. But still, let's not forget, Indian banks and NBFCs have actually mastered this art of finding out if their gold is spurious or not. And they, I mean, if you really take a risk-reward relationship, there's very little risk there. They have been able to do it very well. I want to ask another question to you as a banker. Do you give cash to the people or do you credit it in their account? Generally.
So the regulation is very clear, cash disbursement up to 20,000 only. And as a bank, Federal Bank has been pioneer in adopting the digital journey, and as our tagline is very clear, digital at the fore and human at the core, all the transactions are happening through accounts only, and it's seamless, integrated everywhere, and as Sarah said, it's means 15 and 20 minutes, the customer pitch into your branch, there is a dedicated desk, staff who are handling your request. You come, 15 minutes, you will get the money in your account instantly. And now in the era of UPI, even very rarely people come and ask for a cash.
So if a person does not have a bank account with you, even they can take a loan?
No. So there is a mandatory KYC which every client who is or the customer who is approaching to take a gold loan, they have to conduct a KYC. We need to have a SIF ID as a PIN, and that is mandatory.
Right.
So that the entire transaction, see, it is not the question of how immediately you give the gold loan. We also, as a responsible financial entities, we have to also ensure that the money which we are giving it has a specific end use also.
Yeah.
Yes.
That is true. So clearly, therefore, this is the difference between the organized and the unorganized, which is why the unorganized is also there, because the KYC requirements are not there. But now, coming back to the KYC requirements and all that, and this is to both of you. Do you think there is any arbitrage between a bank and the NBFC and what you guys do?
Sorry, no, I think KYC requirement for regulated entities as prescribed by RBI, so there's not much difference between what a bank does and what an NBFC does at the time of lending. I mean, the only ease for a customer to go to NBFC would be lesser bureaucratic process. Other than that, I think KYC as such, there's no difference. Yeah, in the unorganized market, yes. You don't need any KYC.
Unorganized is you go to your neighbor or somebody who is a money lender, and I understand that. Right. Now, again to you and to all of you, this is, there are these credit bureaus which have come in now. If you want to give a personal loan today, you look at a score and things like that. When it comes to gold, do you use credit scores?
No, gold loan as a product, it's an secured product. We are getting gold as a collateral, and there is no credit score we are asking.
The risk is on the gold rather than on the person, although you take care of the person. So credit bureaus don't get involved in that. When it comes to your data analytics, Mr. Alexander, sorry, go ahead.
In fact, actually, a lot of customers, they do gold loans to improve the credit score. The guys who don't have CIBIL credit score, a lot of times they would take a small loan
and then go and pay whatever it is so that their scores go up, etc. In fact, that's why we wanted the credit rating person, but unfortunately his compliance had some limitations. It would have been nice.
So just to add, he rightly said. So what happens, credit score is also a function how you behave or how your credit history evolve over a period of time. So when a customer, he takes a gold loan, he is creating a history of credit in the financial sector, and which gives comfort to the rating agencies also, or the CIBIL or any other agency. So they can build a credit history over a period of time, which will help him now if he is going for a personal loan or a housing loan kind of thing.
It's a non-digital, I mean, you all use digital in a big way, but Mr. Alexander, I want to tell you, how do you see these digital apps which are coming up now and digital ventures? do you believe they will make a big impact on the gold loan market going forward? Because I will ask them because, but they are conflicted because they have the digital platforms. I want to ask you have the traditional thing and you're very big in this market. You determine many of the policies and the practices, etc. How do you see this? Do you see a big role for digital players in this market?
Yeah, thank you. I think digital. I would like to say something more about the sentiments of customers also with regard to digital. As we also said, you just heard people say that we don't look at the credit score, etc. We only look at the gold ornaments, and if it is good quality, we give the loan. So the gold per se has to come to the lender or the NBFC or the bank. You can't do it digitally. Sitting saying that the gold is in my house, please give me this much of X amount of loan. You can't do it. The gold has to physically move to the branch. So digitally, I am not sure how digitally a gold loan can be given. Probably disbursing the funds, collecting the interest, paying the money, etc., can be done digitally. But
Right.
the physical gold loan, once it has to physically travel and come into the locker of the lending institution, be it a bank or an NBFC, I am not very sure how digitally they can be useful. But of course, digital can be used maybe to identify potential customers, to probably help the customers to navigate and come to the branch, etc., or probably ask somebody to digitally see the rates, etc. But finally, before handing out the money, the gold has to come to the branch. And today, I'm not very sure how digitally gold can come into the lending institution physically.
Right. What do you think? And then I'll come back to them.
Yeah. So, if you see the entire chain of gold loan delivery, I agree with sir that we cannot make entire process flow digital, but there are certain aspects like KYC onboarding of a client, KYC, and then disbursement of the loan. These two aspects can be and is being made digital. However, the checking of the purity and all other aspect is there has to be a manual intervention and human intervention to avoid fraud and other
The reason I
activities.
ask is before I come to them is, you see, you look at the traditional jewelers now. Most of them have the brick and mortar, but they are all playing in the digital arena. They have either another company, whatever it is, or they invest behind a company, etc., etc. I'm not going to ask you whether you have a bank as an investor, but do you think, what is your view on this? I mean, do you think you can exist? It's a wrong way of seeing it. Do you think you can grow without actually the brick and mortar part of it, the physical part of it? I know you have to ultimately collect physical gold. That's not what I meant. But I'm just saying physical place and not using third-party custodial vaults, things like that. Do you think we can survive?
See, we just need to understand how are we using the digital journey to make things easier, to enable the whole process simpler, transparent, and accountable. Correct? So that's what we are trying to do here. So both of them are pretty right. You cannot have the entire journey digital, keeping in mind that SA is a very important part in the whole stuff. So it's all about structuring. You can get your KYC done, which is online, can be done digital. You can have a pre-approval for your loan based on the jewelry that can be photographed and sent to the bank based on the initial grammage. There's a pre-approval already been done. So the first part is being covered. And now coming to the SA part. So we can use a BAS certified SA. There are enough HUID stage, places across all cities and towns in India now. The bank can link up with a BIS certified SA. They can just get it done there. And based on their certificate, you can dispose a loan digitally.
Right.
Right?
So you can make the whole journey faster and simpler, is what you are saying.
That's right.
You have any additional?
Yeah, I think same lines. Basically, in a pure gold loan business, the entire journey can never be 100% digital. The digital processes are only enablers to serve the customer better and faster.
Right.
Right? So whether it is KYC or whether it is an payment process, that's the part which becomes digital. Rest, you still have to handle the gold jewelry. You still have to vault it. You still have to maybe, move from one place to the other if you are doing a doorstep or at any other point of disbursement. So it will always be a phygital model. But I mean, the important question that you asked is whether people like us who are approaching it differently, whether they will exist or whether there is enough scope. And my answer to that is there is ample scope, not only for people like us, but many more who will come with better solutions. I mean, another solution that, as I said, making it entirely digital by doing a BIS hallmark online journey, etc. I mean, that if it comes up, if it works, it will definitely be a enabler for a lot of customers who don't want to walk in to a jeweler shop or to a bank, etc. So I think there is enough scope for many more. It's just matter of how can you serve the customer better, faster, and in a regulated environment.
Now, my belief also is that this is going to grow significantly high. I mean, it's not. I was just provoking an answer like that. Now, very quickly, I want to just go into a couple of things. There are some questions there. How much interest do you charge, etc. We'll take that up last. Now, we all spoke about hallmarking, and he even said, you also said, 20 minutes. People are trained to check, and after all, you use an assessor who just does this and says, okay, this is clean gold. You're willing to give a loan on that. Have we started using the hallmarking and HUID in any sense, meaningful sense at all in gold lending? Are they integrated, or there are two parallel systems? Doesn't matter whether it is HUID is there or not. I will do my process. Is that how it is? And then I will come back to you, Mr. Alexander.
So, as of now, these are two parallel activities. While lending against gold jewelry, the valuer ensures that the adequate carat of gold jewelry is available and its valuation. The other aspects is still to be clubbed or inculcated in the gold loan business, which I am sure with the ongoing and so much thrust on these activities, it will happen. But as of now, it's not.
Yeah, Mr. Alexander, is that the case yours also? I mean, you don't give much meaningful dependence on HUID or hallmarking. Am I correct in lending?
I think you are correct. I agree with the previous person that yes, we can't depend entirely on the hallmarking, etc. We have to check. But having said that, if this is getting more and more organized and finally it is getting more and more correct and we can trust it better, and there is no, you can say somebody cannot manipulate that hallmarking, etc. Then I think the checking or the assessing will become easier. But as of date, nothing great.
Yeah, I think that's a very important thing as well, because, and maybe digital players can start, because HUID numbers are uploaded. So one of the data points you could always pick up and slowly start promoting is, give me your HUID, I will directly reference, just like how you check the PAN and all that stuff. I'm sure, as I said, there will be much more on the thing. So gold tested. And the other question that I had was, gold lending has shown how to monetize gold, right? I mean, it's the best form of monetization, and it is only in India we have organized players doing this in a very big way. Why are we not extending it now with silver prices moving in and platinum and all that stuff? Is that a mindset issue, or you think that is too risky? Sir, can I come to Mr. Alexander first, and then I'll come to all three of you? Quick answer.
Yeah, always. Our staff also sometimes comes and says, why don't we do gold loans on diamonds, on silver, etc. So you asked about silver. Silver, I think it is a little too cumbersome to store, and I'm not sure about the quick resale value of silver.
Of silver?
Sure. Yeah, silver. I don't know how. If I have 10 kilos of silver to be sold, where the market is very low, I think, because I have to go. I don't know. I have not tested it at all. That's
Right.
It's honest answer.
I think it's, again, for the industry, it's important. What do you think it is?
Yeah, so same thought. Gold, the characteristics of gold and its immediate acceptance by financial institutions or the market as a whole cannot be replaced immediately by platinum, silver, or other precious metals. Because of the fact we have said gold immediate, instant, it's a highly liquid, no other metal has such kind of acceptance. So that's why.
What do you guys think?
So I think for silver, definitely rural India is a huge market, right? So we all know that when they have a good season, farmers do buy silver bars and keep it. But then those are bars. They don't normally purchase silver jewelry per se. So can you lend against bars or coins? No, currently in the current scheme of things, no, right? Coming to platinum and palladium, investment bars, coins, the reach is very limited when it comes to the Indian market because consumers always prefer, number one is gold and then at times silver. So I think the opportunity there is very limited for now.
Yeah.
You cannot lend against the bullion,
Right.
whether it is in form of, silver or gold in terms of bars or coins.
And jewelry is very risky and
Yeah.
saleability is low.
And anyway, you need a precious metal to have a sizable amount of loan.
Right.
So silver and gold value-wise is significantly different. Though it will cater to small loans, but it will not go into high amount, which would be requirement because average ticket size is about 50K in gold loan space. So silver, it may come up. I mean, if and again, handling is another issue.
Yeah, correct. I was just about to think. I mean, you need more space for a smaller loan, but I still believe it is going to come up in my view, because the prices have shot up and people will find meaningful things. While on the subject, why didn't you answer this question? Can gold loan firms accept 24 and 22K coins and bars?
No.
What are the impediments? Is it better security?
No. RBI specifically restricts lending against coins, bars. So you cannot.
Is it only for NBFCs? Banks can lend, right?
No.
No?
No one.
Even NBFCs?
Nobody can lend.
I had a different
No,
thought.
RBI is
Sir,
specific.
is it possible to lend against coins?
No.
Is a question to me?
Is it possible for a gold loan firm to lend against 24K or 22K coins, minted
No,
coins?
sir, I think, no, it is prohibited by RBI.
Prohibited, okay.
Restriction by RBI.
Okay.
I think there is something more to it, sir. Can I add a word more? Because when we give loan against an ornament, it is also, other than the gold price, it is a making charge and also a sentimental value. Both these are absent in the case of a ornament. So in the case of a coin. So in the case of a coin, it is purely dependent on the price of the metal. Whereas if we take pledge of an ornament, it depends on two things. One, there is a 20-25% making charge, which is there as a value to it. The second, there is a sentimental value. Both these are absent. So probably that must have been the reason why Reserve Bank said that we should not lend against bar and bullions.
Right. Okay, now I'm going to go, we have got 5 minutes. What are the interest rates that banks charge? Well, just so that you know that when it comes to this, banker said that we don't consider the person, we consider the gold as a security, but when it comes to interest charging, they consider the person. So it is a high risk, high interest product, even with gold. So generally banks charge between 12 to whatever, 18, 20, yeah, 10, whatever.
Yeah. So interest rate also depends on some factors like whether the gold loan, the tenor, the shorter the tenor of the gold loan, the banks generally charges low interest rate. And then it also depends on the ticket size of gold loan. The higher the ticket size, the lower will the interest rate. And also if the repayment by the customer is on a monthly basis, then also the interest rate varies and it's on a lower side. But on an average, it ranges from 10 to 14%.
Yeah, and it's also important for people to understand it's got physical aspect. They have to keep the gold secure, they have to keep it insured. So it is not like you just give against the gold. So I don't think the market is usurious. It is actually quite well priced. It's slightly better. There's the way it should be. So if a person gives stolen ornaments, what is the procedure or how to find a solution? You shouldn't steal, that's the procedure. But generally, stolen ornaments, if you give a loan, you don't have the collateral, it doesn't belong to you. So if there is a complaint filed, you could lose the collateral and the loan will be on your books and you end up making either, if he pays, it's fine. But if a guy who has brought a stolen ornament, he's not going to pay the bank or the NBFC. It's a risk. That is why what Mr. Alexander said, the data analytics becomes important. Has he come before? Why has he taken? What is he taken? End use he spoke about, Devendra. So that's important. Settlement through auction is highly skewed in favor of the lender. This is a leading question. Well, auction is a process, but would anybody like to comment on this?
Yeah, so, so again, going back to trying to disrupt
You'll have
the
to be
market.
very, this thing, 2 minutes. I want it really close.
So trying to, just be clear, how exactly are you going to change the market per se,
Yeah.
right? So there's a question about the auction. So it's not only about auction. So you're starting about just stepping back, the assay, as you rightly said, okay, we can outsource it to a BIS certified assayer. The collateral management, okay, you've got walls, small walls of security companies who is transporting jewelry and gold across India now, whether it's, brings or sequel, that can be outsourced to them with a RFID tag, okay? So which means it's very easy, transparent, and one step ahead, when there is a balance transfer, right, from one bank to the other, you don't have to move the collateral.
Correct.
It's just moving the collateral from Brink's or Sequel's SBI account to Federal Bank account. Or, so it becomes much more easier.
See, the best option, I see a business in everything. If you believe that auction gold is available cheaply and people are benefiting, buy jewelry in the auction process. It's a much better.
Yeah,
That's
and
a
then
good
again, going back, then the end process, which is the auction, again, it is pretty skewed. It's not transparent, correct? So it's better that you take the jewelry, melt it, you have the actual gold, and then you auction it.
Yeah.
You'll get a better pricing for that.
No, it is to say that the process is very complicated, but a lot of controls have come in, and I think it was a leading question in any case. Very quickly, I want to just close it. How do you monitor M2Ms, especially in a bearish market? Do you hedge? There is no mark-to-market in gold lending. They just ask for higher collateral. If the market price falls, they ask for higher collateral.
What I think he's asking probably is when the market comes down.
Yes, you
and
ask
your
for higher
LTV
collateral.
Yeah. So you
And
basically call the loan.
Yes, if we call the loan, generally you ask for a higher collateral, you end up. NBFCs lend against digital gold. Of course, digital gold is physical, but then the physical gold has to move into the bank premises or in a bank approved vaulted premises. Sorry, I'm taking some of this. How can gold loan providers address borrower challenges with high interest rate, loan value ratios and delinquent payments while protecting lender interest? This is, I think, the whole concept of this conference. So maybe any thoughts on this? And suppose I have digital gold, can I use this as a collateral? As I said, digital gold is a physical gold kept in various vaults. Unless you move that gold to the bank and the bank has a control or it is a bank approved vault, you can't take loan against it from a bank or a NBFC. What is the mechanism for disposal of gold that accumulated on account of default? That's the auction process, which we said. Okay.
Can I add something here?
Please.
So one thing I wanted to say, you said, what is the procedure for accepting a stolen good? I was laughing. how can somebody comes and says, this is stolen gold, how do you accept it?
That is a great idea, isn't it? I just stole it. Can you please lend me something?
The next point is about auctions. I want to take 1 minute on the auction part of it.
Yeah.
See, the auctioning is actually very painful to the customer.
Yeah.
We would rather defer an auction, and we don't mind keeping it as an NPA in our books because we know the value is there, the person is there. As you said, when you auction it, you get only 100%. Whereas if it is we have to purchase the same ornament, the fellow has to pay 130 rupees. there is sentiment also. So actually, auction should be a last resort and should be done only very sparingly. And that is what Muthoot has done. We actually try to do the least bit of auctions. We give more time to the customer, even though sometimes we keep some of it as an NPA in our books. We know it's not an NPA because 100% after 3 months we get the money. So that is something which should be, what should I say, more customer centric and customer comfort, and customer should be, because he is good as ornaments to you. You should not just auction it when the price has fallen, because he must be having some problem. That's why he's come to you for a gold loan.
Yeah.
Give him some more time. So to me, if you ask this NPA for a gold loan, if the gold is still there, the NPA should not be a matter of concern. So that shouldn't force, just an NPA should not force a lender to auction somebody's gold. They should be given more time. So auctioning is actually very painful, and it should be the last resort.
Yeah, that's fine. Last, time is up. Very quick point. Anything else you want to say? Very, very brief. Please collect your thoughts and make it, and we end with that.
As we all said, the outlook for the gold loan market is immense and promising. And with increase, or the entire ecosystem is being, right from the bottom to top, the entire ecosystem is being developed in such a way that all the participants will have a say, and the beneficiary will be the ultimate customer. Thanks.
So as the market is 40% of the market or less than that is organized, it's important to see how we can improve that number from that 35 to maybe 50 or 60, and ensure there is more inclusion from a mass perspective, right? How do we offer cheaper, easier gold loans to the masses? So that should be the objective.
Right.
Actually, that is exactly what I'm doing, Pramod.
Great.
So I'm working in exact that space to convert the unorganized or enable the unorganized market to basically come into the main line.
Anything, final words, Mr. Alexander?
Yeah, I think this is a great market. This is a great service actually we are giving to the country also. I also speak always about that, because as initially I said, we should give spending power to the people. Unless the spending power is there, the economy will not grow. For the economy to grow, we should have spending power. And that should be in the hands of people with limited means. So this is a very easy way, very good way to give spending power to the people. It will spur the economy also. As far as gold loan is concerned, finally, I repeat, you should be more customer-centric, customer-oriented, and auction, as I said, should be the last resort. All gold loan companies should auction only if it is really, really necessary.
Thank you. Thank you very much, and that's for you. Thank you.
Thank you.
Yeah, sorry? Yeah.
Check.
Its margins on gold loan by NBFCs, banks, and co-lenders is not covered. That we have to. There is no uniformity.
I can't hear you.
Margins, gold loan margin, while lending by NBFCs, banks, and co-lenders. This
Yes.
is question one. And second is the auction by the banks, gold jewelry auction by the banks, NBFC. So what are the norms and what are the system here? There is no uniform.
First question was what?
Margin while lending.
Matches.
Yeah, M2M.
Yeah.
Not M2M. The margins.
LTV, I
mostly
guess.
RBI guidelines.
Yeah. So RBI guidelines
that
is
also,
it
right.
stipulates that bank has to ensure 75% LTV. That's the maximum cap. We cannot lend beyond that. So yeah, that is the on margin side. Another question was on the auction, as we have discussed. Auctioning comes only when customer defaults. So there is a period we have to wait for almost a year or 90 days post NPA classification, and then a bank can resort private sale or auction part.
Generally, banks try to settle without an auction, but so there is a time taken. That's it. Thank you very much. you.